Hello, everyone. So this is my friend Brett. We met on Bigger Pockets and we were talking about real estate scaling and everything. Brett works with self-directed IRAs. He does a lot in the financial space. He works with Sense Financial. But Brett, please tell everyone a little bit about how you got into Sense Financial. You started off in the self-directed IRA space. How did you end up where you're at right now? Tell us your story.
Yeah, so I'll keep it brief. Um, I first met the owner of Sense Financial in the mid 2000s, around five, six, somewhere around there. And I was buying single family rental properties through a firm, a real estate firm that he worked for. And that's how we met. And I started attending his meetings. He was primarily helping young adults, college age kids, understand what it's like to be financially free, primarily through real estate acquisition, rentals, etc. And I was immediately attracted to his personality, the way that he conducted himself, his heart of a teacher. And subsequently, my dad got to know him, and we kept attending those meetings, continued to buy some real estate through them. This is personally nothing to do with a retirement account at this point in time. And then, so that's like 2005, six. Fast forward to 2014, I get my real estate license. I still have it here in California, and I qualify for solo 401k. And I'm talking to my dad, and we're like, hey, let's set up a solo 401k. You have this IRA, you can roll money in, and we can take advantage of the participant loan. And now we can do some flips personally, right? So that was the whole point. Okay. I had, I was such an idiot, dude. I had no idea of the power of the solo 401k when I first set it
Yeah.
up. Again, this is 12 years ago. And I'm not working for Sense at this time. I'm primarily focused on my real estate business. So I roll 100k in because I wanted to borrow the max that was 50.
Yep.
And we wanted to put that into a personal flip project that we would eventually, quote unquote, stumble across. Okay. We had no game plan, dude. It was a mess. Anyway, I say it was a mess because I set up this plan. I roll this 100k in, and I didn't do anything with it. I didn't make any new contributions. I didn't do anything. It was just silly. And so, uh, fast forward many years later, and I hired employees, so I no longer qualified for solo 401k. So I terminated the plan at some point. Okay.
Okay.
Um, and then this is like, I don't know, 2018 or something, 4 years later, give or take. And then fast forward to about 2.5 years ago, and I'm talking to Dimitri, and he and I were meeting regularly. Okay. So,
Dimitri
um,
is the owner of Sense Financial.
Thank you for clarifying. Yes,
Okay.
Dimitri is the owner of Sense Financial,
Gotcha.
and he was my for your listeners who know the Christian Bible. He was my Paul, and I was his Timothy. Okay, so he was discipling me, and we were meeting regularly, weekly at a coffee shop, and about a year into it, he said, "Hey, you're selling real estate. it you've had all this experience, all this time. You've been an investor. You've been on both sides of the transaction for everybody, including yourself personally. um, I've been doing these consultations primarily myself for almost 15 years since I opened Sense Financial. Do you want to come on with me and take some of that off my plate and also do consultations with me?" And we talked through the numbers and what it would look like and everything. And I'm like, you mean I don't have to drive all over God's green earth trying to sell real estate to people who may or may not qualify, whatever, right? You people who are listening are probably some real estate agents. They have an idea of what the grind looks like, and it can be fun. Don't get me wrong. But so I jumped in with both feet, and this is November of 2023, so about two and
Oh
a half
wow.
years
Okay.
ago, and the rest is history. Here we are. I've been engaging on Bigger Pockets. That's how you and I engaged each other and met, and
Yep.
we've talked a few times. And I think there's some synergy between what you do and what we do here at Sense Financial. And
Yeah.
the beauty of it, Austin, and then I'll shut up after this. The beauty of it is
No,
that
please. Man.
you and I have, like, we're separate lanes, right? We're
Yeah.
separate lanes, but that's why it works, because we're
Yeah.
not, like, neither one of us are competing with each other really in
Yeah.
any way. And so yeah, appreciate you having me on, and that's kind of my short story of how I got to where I am today, professionally. so to
I
speak.
love it. Yeah, what really drew me to you when we were having our conversations, I think we're both very open to hearing new ideas and not shutting anyone out. I feel that finance is really adjacent to politics sometimes. Sometimes people get like in their different tribal silos and it can be almost impossible to have different conversations and everything. But when we had our conversations where we were learning new different things and everything, it's all dependent on what you're trying to do and when you're trying to get there. I see it as a both and strategy. Me on the whole life side versus you on self-directed IRAs. There may be times where a self-directed IRA, solo 401k is a better play for the client. It's all dependent on, the goals, like what is that person trying to do? And we just had some great conversations around that. I remember we were first talking about private lending and, how I'm doing private lending, just playing arbitrage with my policies versus, you have a lot of clients that do private lending with self-directed IRAs and everything. But yeah, it's been great getting to know you and everything. But I wanted to pick a little bit more about your strategy. So you started with real estate, you were a realtor in California. Was that how you got started on your whole, work journey? Were you a real estate agent from the get-go? What did that path look like?
Oh yeah, thanks for asking. No, I was in 97. I'm in high school. I get a retail job. Okay.
Okay.
And it was a drugstore, which subsequently became owned by CVS, which everyone knows CVS because they're all over the place.
Mhm.
And I worked my way up and got promoted eventually to store manager.
Okay.
And I was working around different areas, LA mostly, but also in Orange County. And so I did that from 97 to 2012.
Okay.
And then I left. My wife got pregnant with our first child. I left retail, did a short stint at Rite Aid, like 16 months or so. And then I left that and left retail altogether, primarily because, okay, let me, I always wanted to get my real estate license. By the way,
Mm.
Austin, my goal with getting my real estate license was to literally and figuratively open doors for myself. And it definitely has done that, but I lost
Mhm.
track of the literal part because the literal part for me was to find new deals for me to acquire.
Oh,
And it
okay.
was,
Yeah.
my strategy was buy and hold, but also I wanted to get into possibly wholesaling, fix and flip, all that stuff. And most of that did never came to fruition, but the figurative part absolutely did. Because had I never gotten my real estate license, honestly, um, I don't think you and I would be sitting here today. Because
Mhm.
everything along the way, and you can see in arrears, you can see how God works in our lives, and different doors are open, different doors are closed, and it just leads us to the point where we're at now. And 100%, dude, this position I'm at now was led to because I got my real estate license. But to answer your question, I was in
Mhm.
retail. I managed
Okay.
a bunch of employees in the drug retail environment. I loved it. I learned a lot. People I hired, I fired, I did all sorts of stuff, and babysat big people mostly is what I like to say. But it was fun, dude. I loved my job for a long time, and then it got to the point where, okay, my wife's pregnant, we have a kid. Um, I don't want to work every holiday, and when they're out of school, be working constantly, because that's the increased business time for retail, is mostly when everyone else is on vacation, right? So I'm like, I don't want to do that anymore. So I got my real estate license, and that's I've been a solo agent, I've been on a team, I've run a team. I'm just back to a solo agent, which is kind of a
Okay.
side thing for me, because Sense Financial, self-directed IRAs, solo 401k is my primary focus right now. So
Mhm. How did you push through 2008? What was your experience with that whole
well, I learned a
time
lot.
frame?
The goal was, and it's very intuitive that you asked that question, by the way, because I have a great story about it, and it's short, but it's impactful, I think. My goal, and I was mentored a bit in this direction. Okay, so but I'll take responsibility.
Mhm.
Our My goal was to buy properties, and mind you, this is 5, 6, 7, right? My goal was to buy real estate. The appreciation was going to continue, and
Mhm.
then I was going to 1031 into more real estate, right? So one property was going to become two, and two was going to
Mhm.
become four, et cetera, et cetera. Okay, and then 2008, 2009 happened, and everything fell like way down in value. So the 1031 idea was completely out the window.
Mhm.
But the lesson everybody can take away from this is you make your money on the purchase, meaning the numbers have to make sense before you acquire uh, long-term cash flowing each month. Because honestly, Robert Kiyosaki said it himself, if it doesn't put money in your pocket each month, it's a liability.
Yeah,
I
yeah,
don't care
yeah.
what it is, it's a liability. And I had negatives in my rents versus principal, interest, taxes, insurance, HOA. I had negatives each month on all the properties that I had acquired because, again, the goal was appreciation. That was a
Mhm.
huge mistake because when the market
Yeah.
shifted, I had all these kind of, I don't want to say worthless because they eventually came back again, but almost worthless for a long time real estate that I was paying negative each month. Now, I did take advantage of the depreciation. I did offset my W-2 income through all the losses that I was able to report. So it
Mhm.
wasn't a total disaster. But if I could go back, I would have done a lot more due diligence on making sure that the numbers I was getting from the property managers were actually real life, because those
Mm.
rental pro formas that they provided were completely inflated, like just
Yeah.
by three, four, $500 in some cases each month, dude. Like total.
Mhm.
I mean, they just flat out lied. One of the guys actually ended up going to prison for fraud because he defrauded so many investors by
No
inflating
way.
what the numbers were actually going to look like. And
Wow.
yeah, I think a lot of people suffered in that time frame, 2008 through 2010. So
And I feel one would not be crazy to feel like something like that could happen again. I feel like there's lots of feelings of uncertainty right now. Knowing what you learned, actually going through that and working through that, what are you doing now to potentially prepare for something like that happening again? Is that something that you're even, did that cross your mental framework? Like what lessons have you applied to what you're doing now?
yeah, yeah. Well, I haven't acquired any new real estate for a lot of years,
Mhm.
so I haven't personally been able to apply that to buying new rentals. Although if I did, I would certainly, as I mentioned, I'd certainly do my homework before pulling the trigger,
Mhm.
and double checking. But I am a huge fan. You alluded to it earlier. I'm a huge fan in private lending,
Mhm.
and it could be like a mortgage fund. It could be individual trust deeds, which is primarily what I have focused on so far, because the only liability is the principal that you lend out, right?
Mhm.
And the it's secured by collateralized by a piece of real estate that, yeah, I mean, if the market fell apart and the real estate was worthless and the person stopped paying, I guess that would suck. So there's risk in everything.
Mhm.
But for me, there's a lot less risk in doing these individual trust deeds where they're secured by real estate that somebody's paying a monthly payment on. And this is something I like to hammer home compared to the stock market. And the stock market's been on a tear lately. Like it's going up
Mhm.
like bonkers, man, which sometimes gives people pause in transitioning to a self-directed account and moving some money out of public assets into private assets. But it's really all about diversification. I've still got
Mhm.
money at Vanguard and Fidelity and such. But I also like to do the private lending because when two people are signing on the dotted line for what the terms are, what the returns are going to be, what happens when there's a default situation, you can't get any of that in the stock market. You just like kind of
Mhm.
put the money in the S&P 500 or whatever it is and hope that those CEOs make good decisions for their businesses, right? You have no control. I can't talk to
Yeah.
Elon, and tell him what to do with SpaceX, or which is not public yet, but it's going to be soon. Um, but in real estate, like two people are signing on the dotted line for everything, and so I think
Yeah.
that's part of the power of um, alternative asset investing.
Yeah, that's been huge for me as well too, because I didn't even know what private lending was, 4 or 5 years ago. But it's completely changed the game for me, and it's kind of like jumping from just the market to inside of your network too. Traditional advice is just dog cost average the S&P 500, put all your money in the market. But like you said, there is no control of that. What if we invade Iran next month? What if COVID 2.0 pops off? I feel most people value control, they value certainties, they value guarantees, but their strategy just simply isn't in alignment with that. And the argument isn't take out all of your money. Like you said, you still have money in Vanguard, Fidelity, et cetera, et cetera. The argument, a lot of people, when I'm talking and everything, is not take out 100% of your money and throw it all into real estate or private lending, but get your allocations in alignment with your goals. Personally, just using my numbers, I was doing about 80 to 90% of my monthly allocations towards the market. Now it's somewhere closer to around 15 to 20%, just because I valued control and I wanted to increase my passive income on a monthly basis. But all of my allocations were going to accounts to where I was deferring that game until I was like 60. So I was like, well, this isn't in alignment with what I'm trying to do. But yeah, cool stuff, man. Cool path. I did want to bring up a little bit more personal stuff too. You mentioned faith. You mentioned the story of Paul and Timothy and everything. How does your faith tie into what you do with your business side as well too? That's very important to me as a person. You know me with generational growth, what I'm trying to do to support the disabled communities and jiu-jitsu communities as well too. But how does that all tie into your business side of you?
Yeah. Well, I think, Paul said in Colossians, don't work for man. I'm going to butcher the verse, but don't work as if you're working for man. Work as if you're working for God, right? And
Mm,
so, if I'm aligned with that mentality, it's hard to make a decision or advise somebody in a way that would hurt them, right? And it really is all about the client first, advising them. And I'm not a financial advisor. I want to be clear about that. I'm just using that word advising when it comes to consultations I do for whether it makes sense for them to do an IRA or 401k. In some cases, I can't tell them. I need to refer them back to their tax advisor or whatever,
yeah.
which we always encourage. But I digress. The reason I bring that up is because, we like to treat people as if they're family, right? How would I advise my mom, my dad, my brother, my sister, my wife, to make it really intimate, right? How
Mhm.
would I advise them if I put myself in their shoes? What would I do? And that's kind of how we take the approach of everything. And really, we have a lot of 5-star reviews. We have a lot of clients. They come from referrals, and most of those referrals come from the existing clients we have, which tells me that they think we do a pretty fair job and maybe even better than that. And Dimitri, the owner of our company, is a electrical engineer by trade, and so that by itself has helped a lot with the way the business runs. It's
Mhm.
things have been checked and double checked and triple checked before they're implemented, and so it runs smooth. But everything comes from a stewardship that we are taught in the Bible, as far as the business doesn't belong to us, our money doesn't belong to us. We're managing it for God, for somebody else. Essentially,
Mm,
we're the fiduciary of all of our assets, including our family, by the way,
mhm.
but everything. And to that end, I have no choice but to make the best decision for people, given their situation, as far as what I tell them.
Yeah.
And the income is separate, right? If you do right by people, and I think you have the same mentality, then the income follows. Yeah, I may not make a sale on that exact moment because I was brutally honest with them about whether I thought they should do it or not, and I told them they
Mhm.
probably shouldn't, and I could have gone the other way and gotten a sale,
Yeah.
but that's not what it's all about. It's all about kind of putting myself in their shoes and, like I said, telling them what I think they should do as if they were my mom or dad or some intimate family member. So I don't know if that all makes sense, but that's kind of the approach that we take. So
Yeah, and dude, I think that's why we connected the way we did off the rip. I would argue that my industry is potentially even more greasy. Yeah, I think if you zoom out from the financial industry as a whole, like it's honestly pretty gross because you look at the timeline. You look at 2007, you look at 2008, you look at .com and all these things. Like it's kind of gross from a macro point of view, and it could be so difficult to find the right people in the right locations that aren't like there's predators in the space. There straight up is predators who will really just try and push us out and take advantage of you. But finding those right people in the right locations is so important, and that's another reason why I like having these conversations so much. I'm a big fan of turnkey real estate, but I also love the concept of giving people turnkey access to their wealth building team. You know, you could have turnkey access to a CPA who actually knows what they're doing, a real estate team, self-directed IRAs, solo 401ks, et cetera, et cetera. You have that turnkey style access to go build your team. That
Yeah.
shouldn't be difficult to do, but that's just the nature of, you know, the industries that we're both in. I want to transition and talk about, you know, how you see your clients using self-directed IRAs and solo 401ks. You know, we connected on private lending and everything, but what would you say is the most typical thing you see clients do? Me personally, I hold some land lots, some vacant land lots, really specific type of land, and then I sell on terms to collect that passive tax-free cash flow. But what have you seen as the norm in the self-directed IRA space?
Well, I would say now, let me preface this by saying our clients have what's called checkbook control, which
Mhm.
means we don't have um, necessarily have knowledge of what they invest in unless they share that with us, right? Because we're not a
Mhm.
custodian. We provide the vehicle and the client drives the vehicle where they want within the IRS guidelines. And so when I'm answering this question, it's based on, and it's probably accurate, but it's based on what I'm primarily asking people during the initial consultation and for their subsequent questions that may come in about a certain situation. Okay. So because that's part of my MO. When someone says, I want to set one of these up, I always ask, among other things, what do you want to invest in?
Mhm.
And so that's where this data is kind of coming from. So it's not scientific or anything, but I would say real estate. And when I say real estate, I mean the plan, the IRA or the 401k, actually owning the real estate. Okay.
Okay.
Long-term rental properties is number one for sure. Okay. I would say partnership deals like syndications, multifamily, et cetera, would be number two. And then number three is probably somewhere in the private lending, mortgage fund, private credit kind of aspect.
Okay.
And the reason I think it goes that way is, um, especially the second two, the private lending and the syndication, is
Mhm.
because a lot of our referrals come from investors or people who offer investment opportunities like that, right? So they have these calls come in, these inquiries, hey, I want to invest, 50 or $100,000 in your private credit fund. They get on these calls and they're like, well, I don't have enough money to do it. Or, I got this money in an IRA, and then they connect them with us and we help them kind of unlock their retirement funds to be able to invest it into that private credit
Mhm.
opportunity. And so that's where a lot of the referrals come from. But really, it's real estate. It
Mhm.
really truly is. And I will say, just to add on to that, um, I love real estate. I think owning real estate personally, because of all the tax benefits, makes more sense
Yeah.
than actually owning it inside of a retirement account. Um, People can make a lot of money both directions, so there's not really a wrong way to do that. But I
Yeah.
think if I'm making a decision, do I do private lending or do I do real estate, and which vehicle do I do it in, my personal situation or my retirement account? It's going to be private lending in my retirement account all day long, because
Mhm.
you don't get the tax benefits of owning real estate in your retirement account. Now you get the appreciation, it's all tax free, there are no taxes, so it's a
Mhm.
give and take. But um, anyway, I'm inserting my own opinion into the matter, and that wasn't your question, so I apologize. But really, real estate, to recap, rental properties, private lending, and then syndication are kind of the top three for sure.
No,
But
you,
so it's
you
all real estate. It's usually all real estate,
real
So
estate related. It's just a
yeah,
matter of, you know, are you going to hold that actual asset? And that was going to be my follow-on question. Tom Wheelwright, you know, famous book, Tax-Free Wealth. He
yeah,
talks about in there that kind of, I really found this interesting. He's like, you shouldn't own a tax, you know, tax forward, a tax advantage asset inside the self-directed IRA. It's like a double negative with math, you know, -1 times -1. I found that really interesting. So his argument was don't hold real estate inside the self-directed IRA because it's already a tax vehicle. And it sounds like you were kind of, you know, saying something adjacent to that as you were going through. You do more lending slash indication through the retirement account, but perhaps not hold the actual assets inside of the retirement account.
yeah.
Would you say that's on, on par. What do you think his take on that, holding actual real estate inside of the self-directed IRA or
Yeah.
solo 401k? What are your thoughts?
Well, great book, by the way. Everyone should read that book.
Yeah.
I should read it again, actually. But here's the thing: self-directing is all about self-directing,
Mm,
and self-directing wisely is all about investing in assets you control, and you can understand, because then you can protect the principal. Right? Warren Buffett said, "Always protect the principal." That's priority number one. If real estate, rental properties is what I know most, and I can increase the value of the account or the plan or my personal situation most effectively,
mhm,
then real estate's probably the answer for that person.
mm,
So it's really about what they know, control, and understand. And if it happens to be rental properties, then that's probably what they should consider doing inside their retirement account if they're going to truly self-direct. It doesn't mean they can't branch out and learn more stuff, but if they don't know anything about private lending or know anything about syndication, it's probably not wise to start there.
yeah.
So anyway, that's my 2 cents. I try not to insert my own opinion too much into what they should invest in, because we're there to provide the vehicle and kind of answer their questions. But I always like to say, what do you want to invest in? And if they say I don't know, then I say, well, what do you know? What do you understand? What
Mhm,
if you had to choose, like, what asset class would you put your money in? And and then what way would you do it, right? If it's real estate, would it be private lending? Would it be rentals? Would it be Airbnb? What would it be? And
mhm.
so that's kind of my answer to the question. It depends.
Yeah, no, I like that. I like that take a lot too, because especially like with syndications and private lending, things could go south very quickly. I mean, in real estate too, really with anything. If
Sure.
things aren't structured in the correct way, you could get burned very quickly. So, figuring out what you're comfortable with, and if you're not comfortable, increase your financial education. That could be a, partner to your different people that you're working with. Hey guys, that's all we have time for. I really wanted to jump into more case studies, but we're going to do a second episode there, walking through some high net worth W-2 side employees. That's really my niche and who I experienced. It's kind of my story as well too. So we're going to talk to Brett again and dive in a little bit deeper. But Brett, thank you so much for your time. This was truly fun. I wish we could have gone longer, but I'll talk to you soon, man.
All right, buddy. Thank you so much for the opportunity. Take
Okay,
care.
cheers.